When systems fail, the crises that reshape global power. In 2008, the global financial system came close to collapse. Banks stopped trusting each other. Credit markets froze. Governments intervened at a scale not seen in modern history. Trillions of dollars were deployed. Emergency meetings were held across continents. Central banks acted in coordination. And yet, for a brief moment, the system stopped working. Not partially, but fundamentally. The rules that governed global finance no longer held. And when rules stop working, power does not disappear. It shifts, which raises a deeper question. If modern power operates through systems, what happens when those systems fail? Modern systems are designed to appear stable, predictable, self-correcting. Financial markets are governed by rules. Central banks manage liquidity. Institutions coordinate policy. On the surface, everything appears controlled. But stability in complex systems is often an illusion. Because complexity creates fragility. The more interconnected a system becomes, the more vulnerable it is to shocks. And global finance is one of the most interconnected systems ever built. Capital flows across borders instantly. Banks are linked through exposures. Currencies move in response to global sentiment. And decisions made in one country can trigger consequences in another. This is not accidental. It is the design of the system. And it works. Until it doesn't. Systems rarely fail gradually. They fail suddenly, and often unexpectedly. The Asian financial crisis in 1997. Currencies collapsed across Southeast Asia. Capital fled. Entire economies contracted within months. The global financial crisis in 2008. Mortgage markets in the United States triggered a global banking crisis. Lehman Brothers collapsed. Interbank lending froze. Confidence evaporated. The Eurozone crisis. Sovereign debt concerns spread across southern Europe. Markets began to question the viability of entire economies. In each case, the system did not simply weaken, it broke. Because systems are built on assumptions, and crises expose when those assumptions are wrong. When a system fails, it is not just markets that collapse. It is trust. Trust between banks, trust in currencies, trust in institutions, and most importantly, trust in the rules. Because rules only work if participants believe they will hold. The moment that belief disappears, the system begins to unravel. Liquidity dries up. Risk becomes impossible to price, and decisions become defensive rather than rational. This is why crises spread so quickly, not because of data, but because of behavior. When systems fail, the visible structure of power reappears. Governments, central banks, institutions. But not all actors have equal influence. Central banks become dominant. They provide liquidity, stabilize currencies, coordinate interventions. In 2008, central banks acted together. The Federal Reserve, the European Central Bank, the Bank of England. Swap lines were established. Interest rates were cut. Quantitative easing was introduced. These actions were not part of normal policy. They were emergency measures designed to restore the system. And in doing so, they revealed something critical. The system is not fully self-sustaining. It depends on intervention. Crises shift power toward those who understand the system. Technocrats, economists, central bankers, policy specialists. During crises, decisions must be made quickly. There is no time for political process, no time for public debate. Decisions are made by those with technical expertise, those who understand liquidity, risk, market structure, institutional interdependence. This is not a conspiracy. It is a functional necessity. But it also concentrates power, because in moments of instability, expertise becomes authority. Crises do not just disrupt systems, they reshape them. After 2008, global financial regulation changed significantly. Basel III introduced stricter capital requirements. Liquidity rules were strengthened. Stress testing became standard practice. The Financial Stability Board was established. These changes were not incremental, they were structural. They redefined how banks operate, how risk is measured, how resilience is built into the system. Crises create the political and institutional conditions for change that would otherwise be impossible. Because when systems fail, resistance to reform weakens. Not all countries experience crises equally. Advanced economies often have more tools, stronger institutions, greater access to liquidity. They can stabilize faster. Emerging economies face greater challenges: capital flight, currency pressure, limited fiscal space. The same global system produces different outcomes because the ability to respond is not equally distributed. This is one of the defining features of modern power. The system is global, but resilience is uneven. Today, financial systems are evolving again. Digital payments, algorithmic trading, cryptocurrencies, central bank digital currencies. These innovations increase efficiency, but they also introduce new risks. Speed increases volatility. Automation reduces human oversight. Interconnection deepens dependency. The next crisis may not look like the last, but the pattern will remain. Complex systems eventually fail. Empires control territory. Systems control behavior. Rules govern systems. But crises rewrite the rules. And when rules change, power shifts. Not always visibly, not always immediately, but inevitably. Because power does not disappear. It adapts. It reorganizes. It moves to where influence can be exercised most effectively. Across this series, we have seen empires collapse under financial pressure. Systems replace direct control. Technocrats build networks. Rules govern global finance. And now, we see what happens when those systems fail. This is how modern power works. Not through a single structure, but through a sequence. Collapse, adaptation, reorganization. If you want to understand the modern world, you cannot look only at governments or borders or events. You have to look at systems, at institutions, at rules, and at the moments when those systems fail. Because those moments reveal where power really lies. If you followed this series from the beginning, you now see the full picture. From empire, to systems, to rules, to crisis. And if this helped you see the world differently, subscribe to continue exploring how power, finance, and institutions shape global outcomes. Lessons Untold. Relax, review, reflect.